Good morning, everybody. It's Saturday morning. Thanks for taking the time out to come to this special presentation about the Orderflows Flowscalper. Now, I'll get started. It's a little bit early, but I'll get started in about a minute. Still waiting for some people to come online, but just sit tight and we'll get started in about 30 seconds. I'm just going through some last minute checks, making sure everything is working fine. So just bear with me and we'll get started in a second. I'm not talking right now. I'm just going through some last minute checks, so I'll get started in a second, Gene. Okay, guys, so looks like everything is working fine. So let's get started. All right, so good morning. Everybody should be familiar with who I am. This presentation is for people that are interested in the order flow scalper. Now, if you have a problem hearing me, let me know. Put something in the chat box. And I'm looking at the GoToWebinar control panel. It looks like everything is fine, acting normal. So let's get started. Excuse me, I had a bit of a, not a sore throat, but just a dry throat. I'm in the Chicago area and it's quite cold, so we got the heater on. Even with the humidifier on, it's still a bit dry. So what is the flow scalper? Well, let's first today we'll talk about got to go through the disclaimer. Everybody knows that we're all adults. Trading involves risk. We're not all Robin Hood traders. I like to think of us as, even though we're not considered professional traders, we are smart enough to know that trading involves risk. So the agenda for today, I'm going to talk a bit about the flow scalper. Then I'm going to go through the different indicators settings, right? Because there's different ways you can adjust how it looks on the chart and the strength and etc. But I'm going to talk about that. Then towards the end, the third part of the presentation, I'm going to discuss individual markets and the settings for them. So everybody trades different markets on different time frames, and in general, the settings are going to remain the same, whether you're looking at a 1 minute chart, a tick chart, but there might be, depending on the market and its volatility, you're probably going to want to adjust something to sort of not, curve fit it, but, adjust it for the market and the time frame that you're looking at. Okay, because, you got to realize whether you're trading, NQ is going to trade, even though it moves the same as ES, it's a bit more volatile. So you're probably going to want to add sort of adjust one or two of the settings to sort of filter out some of the noise just because of the overall volatility in the market. I'm going to talk about that in the third part of today's presentation, and I'm going to show you. I'm going to go through charts. I'm going to change the settings on them. The first half will be, just sort of screenshots to sort of talk about that. But the last part will be, on NinjaTrader, showing you how, when you adjust the setting, what it looks like and how it affects it. So Flowscalper runs on NinjaTrader 8. All my order flows software runs on NinjaTrader 8. Sometimes NinjaTrader gets, a bad rep because sometimes people got older computers, but you know what, for me, NinjaTrader has been fine, even though I'm sort of got a love-hate relationship with the people at NinjaTrader. Overall, the software is great, and I have an account with several brokers, one of which is NinjaTrader brokerage, and I've never had a major issue. And I did have an issue back on I think it was 2015 or something, or where the system hung for literally a couple minutes. I had to log out, log back in while I was in a trade. Other than that, I've never really had a problem. So I find NinjaTrader pretty reliable. It pays to have a newer computer. If you're running on sometimes people got old computers. You could buy a decent computer. You don't need the fancy $3,000 trading computer from some of these trading computer companies. Honestly, you can get by with an i5. I prefer to have more RAM, 16 gigs of RAM, and ideally have an SSD drive. And you can get that stuff for $400, $500, at least here in the US. And monitors are cheap. You could usually hook up 2 or 3 monitors to that. Now, on NinjaTrader 8, you need to enable the tick replay, okay? And I'll talk about that later. That's so, if you're doing historical charting and you want to see how, how certain settings work in a market, that's how you're going to want to have it, because you want to have the indicator show up, as soon as you load a chart, it will show up on the past data. That's the big difference between NinjaTrader 7 and NinjaTrader 8, is the way it handles data. It's going to work on a normal candlestick chart or Orderflows trader chart. It should work on the volumetric chart, which is the NinjaTrader version of the footprint chart. So, and it's going to work on different time-based charts like minute chart, 30-second chart, 5-minute chart, range-based charts, tick-based charts, volume-based charts, heiken ashi charts, and kagi charts. Now, heiken ashi charts are sort of coming into vogue, but kagi charts, not many people use it. Well, Renko charts, not so much. Oh, no, they don't. I don't use Renko charts. Some other vendors have come out with these Renko charts that are like Uni Renko and etc. I haven't tested them. I don't use those type of charts. Part of the problem is, trying to recreate it on a historical database. You can't. I just find, honestly, personally, I use mostly minute-based charts. I do look at range-based charts and volume-based charts. I don't look at tick-based charts. Line break charts, I'm not sure. I don't use those. I'd have to take a look. Maybe I'll do that later when I got NinjaTrader up and running. Now, what makes the Flowscalper run, basically? Well, when I was working on the Flowscalper, right now, people that know me and order flows, know I've been involved in trading with order flow for a long time. And, there's a lot of tools out there that measure certain things in the order flow, right? Like I have other indicators out there like the pulse, right, which looks for a certain thing in the order flow, or the delta scalper, which looks for a certain thing in the order flow. But where the Flowscalper differs is it picks up the change in the order flow, right? Because, generally you're going to have order flow that's bullish and order flow that's bearish, right? Rather than just, one thing happened just like that in the order flow that, buyers all of a sudden jumped into the market. Sometimes the move is more subtle, right? Because you got to remember, right? Big traders, they don't necessarily want to just all jump in, pile into the market. They want to finesse their order without necessarily moving the market. And when you have several big traders or companies doing that sort of at the same time, it will show up in the order flow. So it doesn't just concentrate on delta or imbalances or point of control or volume. It uses all those different pieces of information, okay, and it's measuring where the change is occurring in the market, right? So you got to remember, right? There's so much trading going on, and sometimes these little shifts are hard to see, especially if you're looking at a footprint chart. If you don't know what to look at, it's kind of, I'll say useless, but you have to train yourself to know what to look for, right? You got to be picking up these different shifts. If you've spent a lot of time watching a dome or a lot of time watching a footprint chart, you've sort of internalized all this information, sort of the flow of trading that's going on, and you could sort of pick up. You could see the sort of the current, the undertow of the market starting to go in one direction, and that's sort of not the highest level you could reach as a trader, but that's the level where you sit back and say, yeah, I really got a firm grasp on the direction of the market. And that's why I created the Flowscalper, to help traders see that current, see that change in the market. Okay, because really the hardest part of trading with order flow is putting the pieces together, right? Like I said, there's a lot of indicators out there based on order flow, but they're really looking at sort of one little piece of information. They're not really taking into account everything that's happening together, right? You want to put everything together and understand how the pieces are fitting together. So, excuse me, the signal of the order of the Flowscalper, right? This is a footprint chart, okay? And if this is the signal right up here at the top, this red down arrow, okay? What it's taking into account is sort of what's happening right in here, right? Right as this market starts to turn and before it sells off, right? It's telling me that the order flow has turned bearish. Just as here, it's telling me the order flow has turned bullish, right? This blue arrow. Now, there's different ways you could have it signaled on the chart. I'm going to talk about that as well. You know, some people like to have zones drawn out. Some people like to have, you know, some other shape. I prefer the triangle up, triangle down. You know, some people like to have different colors. You could adjust all that, okay? So I'm going to get into those. I'll get into that when I get into the individual settings. I'm just going to take you through some quick charts here. So I'll be talking about later when I deal with sort of the different markets, because you know there's just a way I code them, like 551. Okay, so this is NASDAQ yesterday on a 1 minute, and there's basically a couple settings that will apply to all market. It's going to be 551 or it's going to be 051. Okay, and you're going to either adjust the first number or the last number or the middle number. Generally, it's going to be the outside than the inside. But just show you how, you know, with the same settings, you know, silver 551. Now, when Flowscalper was first, when I was working on it, okay, initially all this time was, you know, I wanted something that was going to give me an indication of which way the order flow was in the near term, because you know there's a certain market that I trade, and I'm really just, you know, in and out, in and out, in and out, and I wanted to know where the next few ticks were going to come. You know, the next 3 or 4 ticks were going to come, and so it's like I know that, you know, I could look at the order flow and see it, but I wanted to have something that you know, would just highlight it to me on the computer to make it easier to see. Part of the reason is because it's a market that trades at night. It trades in Asia, and honestly, in the middle of the night, sometimes my faculties aren't there, and I needed something that would put it up on the charts on there. So I'm gonna get to the questions a little bit, you know, towards the end, but or I'll try and take a break in between just so I don't get sidetracked. But you know, there's a lot of questions. Yes, it can be auto traded. It can be what's the term? Set up in a software markers. I'm meeting with or talking with Pablo to trying to get a special training session with his markers and show you how it works with markers, and you know how to set it up and do all that. It's probably going to be, you know, Christmas is this week, so I don't think this week. It might be that time in between Christmas and New Year's. I don't use Bloodhound, but you know, my indicators, there are users that use Bloodhound with my indicator. You know, it's basically, it is a mark on the chart, so it should be able to work with Bloodhound. Like I said, I know there's other users that use my indicators that do use Bloodhound and are able to get it going. So, but I'll talk about that in, you know, a bit later. Okay, now this is British pound. Okay, and you can see the settings are slightly different. The middle one is still the same. The middle one is the strength. The last one is Contango. The first one is the look back period. Okay, so it's basically 551 or 151 or 0, depending on the market. This last one is Contango, and I'm going to talk about that setting a bit later. Now this is Ultra Bond. Okay, so people are going to say, "Oh my God, Mike, that's so many signals." Right? That's useless to me. Well, you know, I know there's a lot of questions right now coming in about auto trading with markers or with Bloodhound, and for me, you know, I said when I first created this tool, right, the way I envisioned it was because I needed something that was going to help me with my individual, I hate to use the term scalping, but more short-term trading. And so I wanted to know, as long as this order flow was bearish on the way down, I can stay in the trade. Just as if I'm long in here, what is the order flow doing? Is it bullish or bearish? Now, when you're doing with, when you're setting up something on auto trade, sometimes you don't want to see so many signals in there. So there's a way to filter that out, which I'll talk about later. But when I'm in a trade, right, I want to know, do I want to be cutting it, or is this about as far as this market's going to move? But if I'm in a trade, right, and I see red, down arrow, down, I know the order flow is still bearish. Okay, so I can stay, I could stay in it. This is the MES. Again, this is the same settings, right? This is the micro E-mini from yesterday. That move at the end of the session was just was amazing. I think Dow actually made a new high. YM made a new high on the close. But again, you got to ask yourself, what type of trader are you? Are you a short-term trader? Are you a long-term trader? And that's how one of this first part here, where he says 0, is going to change, because that's going to be a swing filter. If you're more of a momentum trader or a short-term trader, you're not going to want to use the swing filter. But I'll go through some examples later on that as I talk about the settings. This is a difference, right? If you say, Mike, that's too many signals because I can't, that's too messy, right? Well, then you probably want to enable a swing filter to find reversals as opposed to something that's more momentum based, right? If you're in a trade, like me personally, if I'm in a trade, I want to know, is the order flow still bullish or still bearish? Okay. Whereas, here I'm just getting, signals at swing highs and swing lows. So, some questions that came in, over the last couple of days. Can you use these on markers or bloodhound? Yes, you could use them on markers. I don't use bloodhound. I have markers. I don't use bloodhound. But users that use my other indicators tell me that it does work with bloodhound. Is this a new tool? Yes, it's a new tool. It doesn't read the same things in the order flow that some of the other indicators do, such as pulse or turns. Those look for very specific things in the order flow. And I have Orderflows Pulse Indicator and Orderflows Trader 3.0. How does this tool work with them? Well, again, it's a different tool. If you're watching the order flow, okay, on a footprint chart, okay, I always say, anytime you get into a trade, the follow-up trade has to be complementary to it. So, any indicator that I have is complementary to the footprint chart, right? Footprint chart is for helping you understanding what's happening going in the market. And, it's, as a trader, you have to trade, okay? Like I said, I know everybody likes to go auto trade, basically build a trading robot and not have to make much decisions. And because making decisions often leads to making wrong decisions. But I find the best traders are the ones that do have call it, some discretion in their trading, by being able to read the order flow and say, you know what, this move is weakening. I don't think there's much left of the move, and get out. Now, conversely, like I said, when you're auto trading, you got your standard take profit, your standard stop loss. Well, that's all well and good. Everyone likes to sit here and say, I'm getting 85% winning trades. This is my winning percentage. That's great. That's good. But the way I trade is I use the auto trader. I use markers to get me in, and I manage the trade from there based on reading the order flow. So the scalper does not replace other tools, doesn't replace the pulse, doesn't replace Orderflows 3.0. All right, so let's take a look at under the hood, okay? So basically, I'm gonna go through this real fast. I just lifted this from the user guide, but I just want people to understand, because I did get some questions saying, hey, I got a pop up on my NinjaTrader saying, this indicator is not licensed. Well, after you purchase it, okay, you're going to get a license token. So you're going to have to add the Flowscalper to NinjaTrader as you would any other add-on. Okay, and once it's added in, then you're going to go to the chart, click on indicators, find Flowscalper. Okay, you're going to click on that. Then you're going to click down here. Make sure you don't have to click down here. Just look down here where it says configured. Make sure it shows up in there. And then you got to enter the license token. You just drop it in right here. Copy and paste it from the email, and you're good to go. Okay, well, then you click apply. Then you click OK. All right. So it's important that you put your license token in. If you don't put your license token in, if you think you've just installed it and it's going to work, no, when you try to run it on a chart, you're going to get a pop-up saying it's not licensed. So just make sure you go through that quick step of putting in your license token here. This is on the properties of the indicator, right? So again, when you open up the indicator under the available indicators, drop in your license token there. All right, so in here, right, this part that says settings, this is the main part that you're going to worry about adjusting, right? This is really the only part you got to spend some time with. Now, the defaults, again, it's what it comes as a default doesn't mean that's for every single market out there, right? Because there's so many different markets, so many different time frames that you're going to want to adjust it accordingly for your market, depending on the liquidity of your market. So the first one is the swing filter. Okay, now there's two parts of the swing filter. There's the enable swing filter and there's the swing period. Okay, if you do not enable it, if there's no check mark in here, then it means you're not using the swing filter, and the swing period doesn't matter. Doesn't matter what you put in this box. But if you enable the swing filter, it's going to look at the swing period, right? So if you have a swing period of 5, that's sort of the average that I like. There's some, basically just my settings that I like is either no swing filter enabled, or swing filter of swing period of 1, 5. I don't really go out beyond 10, but there are people I know that like to look at something like 25, if it's a very volatile market. But I find no swing filter, which is basically 0, 1, or 5. Okay. Minimum bar volume requirement. Now, for most markets in the US, this is not really a factor. When you start getting into thinner markets or even the overnight session, you're going to want to put a minimum bar volume for it to give you a signal, right? You don't want to get a signal on a bar that's got a volume of 5 contracts, right? Because what do you think the order flow is going to be for a bar that's got 5 contracts, or some of these preceding bars that have basically 2 contracts, 3 contracts? It's not going to give you much, right? So this is one way to sort of filter out. But like I said, most markets in the US, definitely E-minis, all the major contracts in the US is not going to be an issue. You start getting into some of these, mini Russell, or some of these contracts that don't have a lot of volume at certain times of the day, you will probably want to use that. Now there's some commodity markets, or some overseas markets are a little bit thinner, so you would want to set a volume requirement. I like 10 as sort of the minimum. Maybe you want to set it at 50 or 100. It's up to you. But I said most markets in the US, most of the time, it's not something you got to even think about. Now, the flow strength, okay, there's 2 flow strengths. There's Contango and there's normal conditions. Now, you'll see enable normal conditions, right? It's got a check in it. You'll most likely want to, this is what you'll be using pretty much all the time. So just make sure there's a check in there. And the flow strength is related to, if you have it enabled. Okay, so if you have it disabled, doesn't matter what you put in there, it needs to be enabled. Now, flow strength, it looks for how strong the order flow is happening right now. So it's a scale of 1 to 10. 1 is the bare minimum, 5 is average, 10 is the strongest, right? Most markets, you're going to be, anywhere between 2 and 5. You're going to want to, you don't want it too weak. If you set it to 1, you're going to get a lot of signals. If you set it to 10, you're going to get less signals. But when 5 is the is the average. 5 is the good starting point for pretty much everybody. Now, again, here's the settings. Minimum 1, 2 is sort of a starting point for most markets, even though I just said 5. But you could go 2. 2 is a bit on the weak. 3 is sort of mid-average. 4 is average. 5 is average. The difference between 4 and 5 is kind of 4, 5, and 6. You can sort of lump them in, but the average would be 5 anyway. 7, you start to get pretty strong. 10 is the strongest. You go with 10, it's going to be depending on the market you're looking at, you might not get any signals, or might get a couple signals in the middle of the night. It's very strong. Like I said, if you're trading E-minis, you set it at 10. You're probably not going to get any signals. It's too strong for that particular market. But if you're looking at other markets, like say, top of my head, I don't know, bean oil or soybean meal or wheat, you can use 10. You won't get many signals, but you'll get some pretty strong signals generally. Now, Contango, this is a question that's come up a couple times. Contango and Contango flow strength are related to each other. And when would you use it? Now, again, to enable it, you'd put a check in there. To enable any of these, you have to have a check in there. Okay, so you can see there's no check. So right now it's disabled. To enable it, you'd put a check in there. Contango flow strength. Again, the same strength readings go for Contango that work for the normal conditions. And the reason that we have it split up is contracts have different participants in them. Okay, and everyone is so used to trading the main contracts, the E-minis, NASDAQ, and they are cash settled. Contracts that are physically settled have a slightly different characteristic because the participants, you don't have as much retail participation in those markets. Okay, and what the Flowscalper does is it sort of takes that into account. And honestly, when you're looking at some commodity markets, right, the amount of retail trading there is minuscule, right? It's maybe 5%, 10%, and you're going to want to have something that takes that into account. It's I'm trying to think of I've been trying to rack my brain trying to think of a good way to explain it. Is it's basically you've got a lot of retail money in the market or a lot of necessarily fund money in the market, but that sort of drowns out oftentimes a lot of the commercial participation, right? Because the amount of retail money or I'll say retail money, but retail traders, the volume coming through in retail from the trading public in markets such as, especially the micros, you don't see that in other markets, okay? And it's sort of having the Contango in there takes into account, sort of flushes out some of that extra, I hate to use the term noise, but sort of that money, because in other markets that are I'll say dominated, but have a lot of commercial trading, you tend to get better moves. Like you say, you look at these micro contracts, and people get stopped out a lot because there's just so much back and forth between the smaller traders, and sort of this. It's the volatility is increased a bit by smaller groups of traders. I don't know if that makes sense to you guys, but that's why we put it in there, because I found that in certain markets, markets that have a lot of commercial participation, it acts there's a different way it acts in the order flow, because when they come in, they can come in quite strong. Now, tight markets, okay, this is something that is important to me, and if you, depending on the markets that you're trading, okay, there's markets that basically what I call flatline, go sideways activity where it just trades basically the bid and the offer, say 6, bid at 7, just trading there for extended periods. And, maybe, 6, 7, and then goes 7, 8, trades 8 for small, goes back to 6, 7. And like that is, it gets a little tricky sometimes trying to read the order flow, okay? And by having tight markets, it's what I call a tight market, basically, a very, bid ask where it's not moving, right? You look at NASDAQ, for example, okay? You could have a bid ask that's 2 points, right? 8 ticks wide, especially on some days. But other markets, it's going to be 1 tick, okay? And if you're analyzing the markets at night, in the overnight session from the reopen at 5 o'clock Chicago time and basically until about 6 a.m. Chicago time, having the tight markets on there is going to help you with your analysis. If you disable it, it's going to sort of ignore those sideways markets where even though there's something happening in the order flow and it's not really evident yet, by having tight markets disabled, it's just going to throw that not that time period, but sort of that activity out, right? It's not going to analyze it. And the reason we separated that from the normal order flow is, specifically for those type of markets, right? Because when a market's moving sideways on a market that's more liquid, that's a different reason than a market going sideways on a very liquid market. Now, sound alerts, right? You can use the default NinjaTrader sound alert. So to enable it, you would click here, right? It's disabled right here. But you just put a check mark in there. Anytime you change one of these, you got to click apply, all right? And NinjaTrader has, I think, 4 default alerts. It's set up for the alert 1. You can actually record your own, say buy, sell. You don't want to make the sound alert very long. I know when I was working at these these banks, one of the favorite alerts people like to put on was the cash register ringing, cha-ching. It's up to you. I personally, the problem is if you're looking at multiple markets and the market starts moving and you have sound alerts enabled and they're all the same, you're going to get confused. You might want to sort of record your own. You just got to be a WAV file. You just drop it in this extension here, NinjaTrader 8 sounds alert 1. You just change this part here to whatever you want, whatever your alert is. Like say you want to say, hey, E-minis or NQ. You don't want to make a sound alert too long because it should just be short, like I don't know, a second or two. You don't want to say look at the E-minis because it's just too long. Because if you got other alerts going in, they'll run into each other. A sound alert rearm in seconds is 30 seconds, so that's how long it will pass before it shoots off another alarm. So that's the main settings, and I'm going to show you when you adjust them on different markets how they affect it. So just really quick, the sound alerts, right? You just go to your PC, go to the drive, the C drive, go to program files, the x86, open up NinjaTrader, go to sounds, and you just drop it in here. So these are the different sounds. They've even got other alerts, depending on the language you have set up for NinjaTrader. But for English, it's in the main folder. But this is the URL right here, program files x86 / NinjaTrader 8 / sounds alert 1 wave. So again, if you're going to change it with your own alert, just change this part here in the settings, the end here. You'd have to scroll to the end to change it. All right, so the trade entry signal. Now, a lot of my indicators now have this, what I call trade entry signal. Okay, so you can either choose to use it or not use it. And what it is the order flow moving in the direction of the trade signal. Okay, so you'll see that there's 2 settings. There's trade price level in ticks and there's trade validity in bars. Okay, so when you have it enabled, there's two settings you got to worry about. The first one is how far from the close of the signal bar the market has to move before a signal is generated. And the second choice that you got to choose from is trade validity in bars. That's how many bars the market has to start moving in from the bar with the signal. So setting that I use for all markets is 2-2. So what that tells me is over the next 2 bars, say I get the conditions are there saying, hey, Mike, the order flow is bullish. I don't necessarily just run in and start buying, right? I want the order flow to, the follow-up order flow to confirm to me that, yeah, it actually is still bullish, right? So over the next 2 bars, the market has to move at least 2 ticks before I get the signal. Now, some people say, well, you're giving up, 2 ticks on your entry. That's stupid. Well, it also keeps me out of trades rather than just going in and just say, oh my gosh, the order flow is bullish. I'm just gonna buy right now. But if you don't have that follow through order flow, and you don't want to be in that trade, because order flow, it's constant, right? It keeps moving, bullish, bearish, bullish, bearish. What you want is bullish, 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 right? And that's where the trade entry signal is going to help, because even though it's bullish right here, depending on whatever reason that caused it to be bullish right now, there could be somebody at JP Morgan or Credit Suisse that's all of a sudden portfolio manager passes them an order to sell 3,000 E-minis. Okay, so what was bullish all of a sudden is bearish. So you're not going to get that move that you want, because all of a sudden there's a big bearish order flow coming into the market. But again, you could choose to use the trade entry signal or choose not to. Again, it's up to you. I prefer to use it. Just it keeps me out of bad trades. And there's times where market is trending. You don't want to fight a trend. And when a market is dropping in one direction or just going parabolic, right, there's going to be profit taking, right? You get those bounces in moves down, which is just people taking profit, and it looks bullish, but it's just profit taking. And then what happens? The market falls over and makes new lows, right? This is where the trade entry signal is going to help you stay out of that, stay out of those bad, what do you want to call it? The bad moves, so to speak. Where the market is dropping, and then some buying comes in because it's really just people covering their short. It looks bullish in the order flow. You're thinking, hey, this is it. Our low is being made. And then once those people cover their shorts, there's no more buying in the market, and the market just keeps dropping further. Now, the next part is the visuals. Okay, this deals with whether you want zones drawn on your chart or not. Some people like to have zones, some people don't. So just really quick, the signal box height in ticks is what is that? It's where to start drawing the zone in the bar, basically. Okay, and all this in here, 2.5, 0.5. Again, you don't really need to adjust those unless you really want to. Signal box opacity 25 basically is how light or how dark you want the zone to be drawn. Signal box width in bars 0 means it's turned off, right? It means it's disabled. If you set it to 5, it's going to draw it out 5 bars starting at the signal bar and the next 4 bars. If you want to do it 3, it'd be the signal bar and the next 2 bars. Some people on some indicators you set this like at a higher number, 25 or even 50, because they want to see what happens when the market comes back to that level. Okay, now signal mark displacement is how far above or below from the signal bar to draw the up or down triangle or whatever you want to set it at. Now this part in here, the data series set up and this set of visuals, you don't need to touch those. Okay, just leave them as it is, because basically the input series is what you're looking at, how it calculates on each tick, the label that appears up in the corner of your chart, and maximum bars to analyze. Visual, auto scale, displacement 0, display in data box, yeah, same, just so it appears on the same chart you're looking at. Now the last part I didn't talk about the plots here, or maybe I get to that later, is where you want them to appear, how you want it to appear on the chart. Triangle up, 8 pixels. If you want to make it smaller, you can. You want to make it bigger, you can. You go pretty big, but honestly, once you get past 15, it's kind of big. Contango, me personally, I keep them the same color, red and for sells, blue for buys. If you're using Contango and normals, if you want, you can change Contango to a different color, maybe, I don't know, orange and green, but I don't discriminate between either of them. I treat them the same. So like I said, you can change the colors. So for example, right, in this case, Contango, right, these colors down here under the plots, I've changed to green for buys, magenta, which is kind of a purple or pink for sells. So you can see this is a Contango buy, this is a Contango sell. This is a regular sell, this is a regular normal buy up here was a Contango. But I would treat them the same. Normal signals and Contango signals, this is where they're the same color here. Personally, I keep them the same, because I trade them the same. I said I've added the Contango feature for a lot of these physical commodity markets. Yeah, I know this is a lot of information to digest. Don't worry, this is being recorded, so you don't have to worry about it. So you could always refer back to this. I'm going to put this also in the download page, and I'll probably throw it up on YouTube as well, so you have access to it. But I know I'm going through a lot, especially if this is the first time you're seeing this and you haven't had a chance to sort of go through the user guide or throw it up on a chart. But it gets really really easy to use. So again, the trade entry signal, this can be enabled or disabled, right? If you want to see every time a signal is generated, whether or not you just turn it on, okay? But if you want to see when a signal is generated and there's follow through order flow, then you'll want to use trade entry signal. So with the trade entry signal, when enabled, a signal is going to print on your chart immediately after the signal bar, not on the signal bar. If you're using the zones, the zone will be drawn on the signal bar, but you won't get a triangle up or triangle down when there's you won't get that on the signal bar. So what it means is when the conditions of the Flowscalper are met for a trade signal to be generated, the order flow in the next bars need to be in the direction of the trade signal. Again, you can decide how many ticks you want the market to start moving in the direction of the trade for a trade signal to be generated. I use 2, default is set to 2. In slower moving markets, like treasuries, you could get away with 1. If you're using a range-based chart, you don't want to use 1, because lots of times, if you spend any time with a range-based chart, anytime it just breaks out the range by 1 tick, it often, you see a lot of these 1 tick reversals in a range-based chart where it goes up 1 tick and then it just reverts back into the previous bar. So you might want to set it at 2. Again, you can decide how many bars you want the market to start moving in the direction of the trade signal to be generated. I use 2, default is 2. So it means the market has to move at least 2 ticks in the direction of the trade within the next 2 bars to be valid. So that's it. So if you have it enabled, a blue buy signal, triangle up, will print only after the signal bar is closed, and the next 2 bars, over the next 2 bars, if it's going in that direction. And the same is for a sell, right? A red triangle will only print after the signal bar. It's not going to print on the signal bar. It's going to print on the current bar. And once it prints, it's not going to change, okay? It's not going to reprint or anything. If you're not using the trade entry signal and the conditions are met in a bar, okay, as a bar is forming, conditions can be met, and then they can, based on the order flow, it can disappear. So once the bar is closed, whatever signal is drawn, that's it. But as a bar is forming, it can go in, it can go out, right? The conditions can be met, they can be unmet. But once the bar is closed, that's it. It will not change. Okay, because some people say, well, it's repainting. Well, no, it's not technically repainting in the sense that the signal is not a signal. All of a sudden now, now when I load my chart another time, it's there, it's not there. No, as a bar is forming, trades are happening. and there's buying and there's selling. And in order flow, right, order flow reads what's being traded on the volume at the bid and the offer rather than what's trading at just, oh, it traded 6 or it traded 7. Traded, order flow reads it's traded 50 on the bid, 60 on the offer, right? So that information is always changing. And so the conditions can be met midway in a bar, early in a bar, right? Just as if you're looking at a candlestick, just a plain candlestick, right? There's times where it looks like it's a big, if you're looking at yesterday on a daily chart, on a candlestick chart in the S&Ps, we were down. There was a big red candle down most of the day. And it's just that last hour of trading, hour and a half of trading, you got that big rally, right? And in some markets it was a big red candle down, but then it closed green. I think Dow closed green, right? And did that repaint? No, it's just the bar is not closed, so the order flow is still happening, right? The trading is still happening, and it's once the bar is closed, that's it. It's printed, period. It's not going to change. So if you're not using the trade entry signal, you can see a signal, it can disappear as the bar is still forming. So if you're using a 1 minute chart, for example, right, 30 seconds in, you could have a bearish signal formed, but all of a sudden buying comes in, the last 20 seconds and it cancels it out. Okay, well, it's not gonna, the signal will disappear, the bar will close, and there'll be no signal ever again for that bar. So that it's, people sometimes get lost in that the market is still trading. You don't necessarily want to jump the gun that a signal just flashed, I got to buy, or a signal just flashed, I got to sell. You gotta wait for the confirmation of the bar closing. So here, this is give you some examples with the trade entry signal enabled. So this is enabled. Okay, so you can see the signal bar. Okay, so here in this example, this is the signal bar, but the actual trade signal occurs on the next bar once it starts moving in that direction. Just as down here, this is your signal bar, and then the next bar starts moving, and you've got your trade signal happening here. Okay, now it could keep you out of some trades, like if you have it set at 2 here, it only moved by 1 tick. Here, well, all these buys confirm themselves. But if you disable it, right, it's just going to form on every bar that appears here, 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 here. Every bar has it, right? Signal bar is on the trade signal. Now, these are those zones I was talking about in the visuals, okay? Some people like to use those, some people don't. But I'll show you why how I use them. So signal box, the zones are on, right? That's these zones being drawn out from the signal bar. If you set it to 0 here, that will turn it off, right? And it'll look a lot cleaner to the eye. This is where it's set to 2. Some people like to set it to 25 to see if this market's going to come back, potentially maybe, should I get short here, or, it's sort of, okay, it's coming back in here, and they're seeing, well, it came back into this area where there was, bearish order flow. What's the order flow look like now? Is it bullish or bearish? Well, it's bearish, as we come back up there, and they're looking to trade it. Again, something depending on your tool that you're using, you may want to use it as support or resistance levels. It's up to you. Again, you'd set the zones out to a longer number, to 25. All right, so markets and settings, right? This is the fun part. I realize there's many different types of charts that everybody looks at, and it does get a little bit frustrating sometimes when I get emails saying, oh, can it work on this type of chart? Well, yes, generally yes, it'll work on most chart types. If you do have a specific question, you should email me specifically the market that you're looking at, the chart type that you're looking at, and I can go from there. But again, the last thing I want to do is give you a set of settings that I would use on a chart, that because I have my own style of trading, my own risk tolerance, and if you're different than me, it's not about me creating a bunch of clones to go out there and take over the trading world. It's about you finding, your comfort level in the market on your chart type, based on your risk level. So, a good starting point. There's different starting points. I'm sort of going to go through some of these. Swing filter, disable. Contango, you can set to 1 or disable. Tight markets I would keep on, but normal conditions, use 5 as a if someone said, Mike, take a look at this market, this is where I would start. Basically, I would start with swing filter off, normal conditions set to 5, Contango set to 1, and then I would, depending on what I see on the market and on how it moves, then I would make the necessary adjustments. The absolute lowest settings that you can have is swing filter disabled, Contango disabled, normal conditions set to 1 with tight markets on. That's like the very minimum, and you'd get a ton of signals. Now, 0, 5, and 1. Okay, so when I talk about these numbers, 0, 5, and 1, that means the swing filter is turned off, so it doesn't matter what you have in the swing period. Normal conditions is set to 5, Contango is set to 1. Okay, so let's take a look at, I'll pull up my NinjaTrader here in a second, but most of the markets, E-minis, mini Dow, mini Dow, mini Dow and gold, you could sort of lump together in the other setting I'm going to talk about, because there's times where they're extremely volatile, and there's sort of times they trade a bit normal. It just depends on how many signals you want. Crude oil, nat gas, start at this settings. In most markets, you can use the lowest Contango setting instead of not using it. I said, you're really going to focus on Contango if you're like me and you look at a lot of markets that are not mainstream. And the reason I do that is because that's my background. I spent a lot of time at literally commodity-based trading companies where we looked at a lot of grain markets, a lot of oil seed markets, etc. Well, here, all right, let's pull up NinjaTrader. Where's my chart here? All right, so this is, let me get my settings here. So 0, right? Swing filters turned off. Bar volume, it's set to 0. Well, I'll set it to 10 because, again, you probably want to have, depending on the markets. So most U.S. markets, you don't have to worry about the minimum bar volume. But if you're looking at things like MNQ in the middle of the night, if you have it set to 0, you're probably going to want to put at least 10 in there. Normal conditions is enabled, set to 5. Contango set to 1. Tight markets. Okay, so click apply. I changed the volume, so it's got to go calculating. So if you have everything installed properly, okay, when you add it to a chart or open up a new chart, it will say up here, Orderflows Flowscalper, 1 minute contract. And then it'll say calculating, all right? And, people ask me, how do you get the date up there? Or what's these lines that you have on here? Just really simple, okay? If you want to add the date, I like to have the date on mine. You go to properties, right? You just click on the screen here, and you get this thing up just by right-clicking on the screen, and left-click on properties, click this button, show date range, okay? I just like to have it so I can, for my own purposes. Then these red and yellow, and there's a green line on top, is this one, current open day, high, low, close. It's a NinjaTrader provided indicator. Just go scroll down in your indicator field, click on current day, open, high, low, close. I like to have some reference, are we trading at a high or trading at a low or going sideways, right? So this is 0, 5, and 1. Now, what it's doing, right? It's when you turn off the swing filter, right? It's not taking into account trades that happen at swing highs or swing lows. It's taking into account everything that's happening. Now, if you want to, I'll show you something here. So I have the trade entry signal enabled. I have the zones disabled, right? If I set it to a level 3, right, just give me, it'll draw out the zones 3 price levels, just to give you an idea of what it's going to look like. Because I'm going to show you, some markets that you're better. I think you're better served depending on your trading. Say you train on a dome, right, and you're just looking for those quick hits in and out. You're probably going to want to use the zones, right? It's just so you know that you're still bullish or bearish in the order flow, right? So this is why I use the trade entry signal, right? Because you can see here, let me put this crosshair on, right? You had this move down, right? Then you had some buying in the order flow that was bullish, but it didn't follow through, right? You don't want to take this trade, just as you don't want to take this trade, right? You still want to be bearish, right, to catch that move down, just as, let me find another example right here. Is you're going up, right? Yeah, there was some bearish order flow that came in here, but it didn't continue, right? So you don't want to, all of a sudden, you don't want to be getting out of this position. You want to try and hold it for more. All right, so this is, now in the evening session, right? If you're like me sometimes and you can't sleep and you want to start trading in the evening session and scalping, you can, right? And this is why I like using these zones, is sort of to tell me that, hey, you know what, this order flow is still bullish or still bearish, right? Just like as if in here, it's very quiet, right? It's trading very tight market, right? This is at 10 o'clock on Thursday night. Okay, so you're getting some sell signals, then it just goes here and it's just trading very tight. Okay, now it's actually going back and forth, back and forth. You get some bullish order flow, bearish order flow, but I'm already short. So, it's slightly more bearish order flow, right? And by having the trade signal on, I don't want to be getting out here. I don't want to be necessarily getting out here. I'm short. Okay, yeah, we hit this sort of swing low, bounced up, but I see there's bearish, 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 even though there's some bullish buying on a market that's going nowhere, right? This market right now is 5.5 bit, 5.5 at 5 3/4, right? It's basically one tick, but it's telling me, this overall order flow is still bearish. So it's just something to keep in mind, right? And this is yesterday, this is the day before, so there's moves to be had. If you want to use a swing filter, right? So we'll enable the swing filter 5. So what you're looking for is swing highs or swing lows, right? There's going to be a lot less signals. Whoops. So just give it a second here. Well, let's take a look at some questions here while it's coming up. Well, there's a lot of questions coming in. Do I trade lumber? No, lumber is a kind of interesting story about lumber from when I was on the floor in my early days. So this is with the swing filter. Okay, so you can see, yeah, you had a trade here, kind of went sideways, but you got a nice trade here, nice trade there. It's really just looking for swings in the market, right? Again, this is with the zones on. I mean, some nice moves to be had in the night session. This is what, I read some study where actually this past year, most of the moves have been happening in the night session. But there's good moves like the new highs, the new lows have been being made mostly in the night session, right? Just going back, if you want sort of more, I hate to use the term more pure signals, look at using a swing filter. So let's take a look at another market. So I'll go back to the 051. Well, disable that 5 and 1. We'll keep that the same. This, I'll go, I don't know, well, we'll go to NASDAQ for now. 'Cause, I've been getting some questions on NASDAQ, so I'll take a look at NASDAQ. And I'll show it to you with 051, which is no swing filter, 5 and strength of 5 and a strength of 1 for Contango. There's going to be a lot of signals. Okay, so this is NASDAQ. So, okay, you can see here, right? There's a lot of back and forth. Honestly, this yesterday, the last, from before the cash close, the last hour and a half of trading was just bonkers. You got some buy down here, sell, buy, sell, buy, more buys. But during the day, you're getting some nice moves. This is with basically a signal on anytime the conditions are met, right? So if you're, like I said, if you're using a dome, you probably, depending on the market, you probably want to use it. But what you want to do on markets that are volatile is you're going to want to use a swing filter. So just enable it. We'll use 5, 5, and 1 as opposed to 0, 5, and 1, and take a look. And it's interesting because somebody asked me a question the other day about, hey, can I use it on Bitcoin? I'll show you a Bitcoin chart. But honestly, people don't really scalp. I mean, I'm sure there are people that scalp Bitcoin. Most of the people I know that buy cryptos or Bitcoin, it's just, you just buy and hodl, right? You just buy and check the market 100 times a day without any intention of selling. So this is NASDAQ yesterday with the swing filter on, right? It's a bit cleaner. You're not getting sort of that back and forth action, even though it just sort of happens on every bar. NASDAQ is a bit of a volatile market in the sense that it's like a cardiac market, right? It makes these big moves and then it just sort of chugs around back and forth. If you trade NASDAQ, right, you got to have tight stops, right? You know that on NASDAQ you get bars like this, right? As it just went parabolic here from 60 and a quarter all the way up to 79. That's almost a 20-point move. It's a 1-minute chart. Okay, so that's why NASDAQ is definitely the market you're going to want to have tight stops on, right? Here was a buy, and then boom, got a nice sell there. This is at nighttime. Some nice sells here, the day before in the NASDAQ, right? So 5, 5, and 1 in the NASDAQ, right? These are the settings. Again, this will be recorded. I'm going to send it out to everybody so you can sort of see the settings in here, 5, 5, 1. Again, in the evening session, Asian hours, this move here, what is that, 81 to 86, and then from 86 you got the reverse signal down into the 70s, so on. The day before, the 16th, I don't know what day was the 16th, Wednesday, sort of came down in here, then you had that nice rally there. You just go back, a lot of signals. That's NASDAQ. Silver is also a market that trades, in my opinion, a bit like NASDAQ. I would use the same signal, 5, 5, 5, and 1. Is it silver already? Yeah. Again, this is with the zones, so it might be a little confusing to some people because they're like, what's this? Why is there no signal there? It's because I have the trade entry signal on. If I have the zones drawn off, you wouldn't see this. You would just see the sells and the buys, the up and down triangles. Silver, again, silver I find is a nice market. Honestly, silver wasn't on my radar until someone just, I was just talking to him a few weeks ago, and he's like, hey, silver market is, if you like Bitcoin, you should like silver. So, okay, I'll start monitoring silver. Gold, gold is one of those markets that could go either way. Swing filter or no swing filter depends on how you're trading, right? If you're just looking for the quick hits in and out in short time periods, you're probably not going to want to use the swing filter. This is what it looks like with the swing filter. Going back again, night session, some nice trades yesterday, the day before, the 17th. Some nice trades. I'll show you exactly. So if you take off the swing filter, sort of looking for sort of, momentum. Reason I have the swing filter on is, people like to trade momentum. Some people like to, which means basically trade every bullish signal. Or some people want a more relaxed trading environment and, are looking for swings. If I should turn off the zones because it confuses people sometimes. Again, if you want to use the zones, you can. If you're using a tool like markers, it's just reading the up and down triangle. It doesn't use the zones at all. It's really using, all it references is the up and down triangle. So, if you're in moves, let me just find a nice, better example. This was a move, here's a move up, right? You got blue, 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 down, red, 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 things like that. From here, blue. Okay, you're not, when you trade, right? Try and trade in context of the market, right? If you notice the market's rallied up from 1881 and you're now trading 1892, $10 move, can you get long here? Yeah, of course you can. You're better served, in my opinion, buying after a move down, or selling after a move up. Again, but if you're trading momentum, you just want to jump in and ride it. Let's take a look at some other markets. I know people now are interested in markets like ultra bonds. Okay, ultra bonds is, it's basically the new 30-year bond. The original ZB is more of a 20-year bond, and ultra bond is more of the real 30-year bond. But again, if you're trading ultra bonds, right? Ultra bonds is a nice market. It moves nicely. It it's worth like 31.25 a tick, I believe. And just like the regular bonds, but you get some really nice moves. This is one where you'd want to keep either the zones on or trade the momentum, so you can see it'll just keep you going, right? You can see, well, it's still bullish, or sorry, still bearish, still bearish, still bearish. When it's $31 a tick, you just need to make a few ticks at a time. And this is really where the Flowscalper was created for. Honestly, the reason that we created this, I wanted to have this coded, is because I'll just show you, right? This market that I trade in Malaysia, KLI, it's a nice market, right? It trends nicely, right? And you kind of these nice drops here, doom, 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 right? Still bearish, still bearish, still bearish. Ultra bonds trade very similar to this market. I just wanted something that's keeping me on the right side of the market. I would read the order flow, but I said, that's a market that trades overnight in the US. I'm in Chicago, and sometimes I lose a little bit of concentration, and I really needed something that was taking what I was looking at and putting it in. This is the night session in ultra bonds. Look at that. These are nice moves. Bitcoin, the futures. Honestly, I don't know anybody that trades the Bitcoin futures. Everyone trades the spot, but Bitcoin future. Part of the problem is everybody, all the brokers got very high margins on Bitcoin. But it's the same thing. I do, honestly, for Bitcoin, I just buy and hold. I'm sort of oblivious to price, but when I buy it at Coinbase, I got accounts at Coinbase, and I just every week I just buy a small amount. But yeah, it's you're still getting these nice moves, in Bitcoin and ultra bonds move a lot alike. Crude oil, let's take a look at crude oil. I know a lot of people look at crude, so let's go and jump in crude. Again, what's the settings are still the same. Swing filter turned off. Normal conditions 5. Contango strength 1. See, so you get this move down, let's move up, back and forth. Now, some people say, well, I don't look at a minute-based chart. I look at, a 5-minute chart. Okay, let's go to a 5-minute chart. Honestly, I don't look at 15 minutes very much. You know, when you're dealing with the order flow, you got to remember it's what's happening right now. When you start going out on longer time frames on the order flow, you're really giving up a lot of the utility of the order flow that's happened in the first minute, because if you're on a 5-minute or a 15-minute bar and the first 3 minutes are very bullish, okay, you got a bar, it moves up, it moves down, and then just sort of closes sideways. You're not taking advantage of that order flow. I mean, that's that's why I think you're going out beyond 5-10 minutes, even 15 minutes is a bit of a stretch. So this is crude oil on a 5-minute chart. It's the same settings. Maybe you might want to adjust maybe the flow strength, but I don't know, I'm still using the same settings, and you're still catching some nice moves, right? You get long here, well, okay, you got a short here, just go sideways. Maybe if you read the order flow, you can recognize that the market's going sideways, you can get out. You don't need to let the market stop you out. This is sort of the battle between people that trade on a robot, want to automate everything. Is there's probably a lot of good reason in here to get out rather than let the market come up and stop you out and take the loss. And then you got a nice trade here. Wouldn't you rather ride this long up here, get out here? Okay, you get short, but it's just not going anywhere. 1 bar, 2 bars, 3 bars, 4 bars. Okay, yeah, I cut it here rather than let the market stop me out 10 cents higher. Then you get the bullish signal at 32, and you can ride it all the way up into the 50s. If you're looking at, I'm kind of mixed actually on longer term charts, using a swing filter or not using a swing filter. I prefer to see every signal on longer term charts personally. And people say, well, you say here you got short here, it got stopped out, short here. Well, honestly, you should have been short from up here, right? Ideally at 72. This day was a bit choppy, but let's take a look at I don't know. We'll go back to E-minis. So it's still set to 051. This time, let's take a look at a 5-minute chart. Just give me a second. Let me drink some water. But yeah, I'll take a look at DAX. DAX and NASDAQ, very similar in terms of price movement. So this is, again, so this is a 5-minute chart on E-minis. And you can see I got swing filter turned off. It's just set to 5, Contango set to 1. Again, I don't want to say, well, it caught this big move. Honestly, this move, once it started, it was just very bullish till the close of the day. But look at this, right after the cash open, you got that nice sell-off here. Evening session, middle of the night, you had a buy here, okay, you got stopped out, or you covered it at a small loss, but then you came right back with a nice trade from basically the 02 area up until here. Then maybe you got you tried shorting this, you got stopped out, tried shorting this, got stopped out, then it came back with a nice move up. The day before, getting a lot of chop, but still nice move down here, nice move up there. In the evening sessions, and don't discount the evening sessions. A lot of people discount them. There's some great movements in the evening sessions. It's almost, I'll say almost better than the day session, but you're getting a lot of price movement at night. This was the 15th, Tuesday, look at that on a 5-minute chart. Go back to Monday. Initially looked bullish, then turned bearish. If you change again, this is set to 0, 5, and 1, but just really quick, if you change this to say a slightly lower number. I don't know. We'll go 2 or 3. We'll go 3. To show you how it affects it. That's why I say, start at 0.51 and sort of go from there, depending on the market. Like I said, there's so many markets, but it really depends on what you're trading. After this, I'll take a look at DAX, and then I'll go into sort of the currency futures contracts, because that's a market that you're going to want to use Contango with. So you can see here there's slightly more signals. You're getting sort of a bunch in here. You got a couple extra buys here before the market. That would, if you're long from in here, that would have hopefully you would have broken even. I wouldn't suggest getting long up here after you just missed this big, if you missed this buy signal here. But you can see there's just slightly more signals on a lower setting. Okay, so all right, let's go back to a 1 minute chart. DAX, where are you here? Well, I'll go back to the original setting, which is the setting that I use for NASDAQ, which is 5, 5, and 1. So just give it a second to load the data. Now people say, well, Mike, it's so slow. Well, it's once you have your chart open, right, for the day, you don't necessarily want to keep changing it. You open it up, you keep it open. Like I said, nowadays you get computers so cheap, video cards so cheap, you could put a lot of monitors on. I said, I've got 3 monitors on this PC. That's the wrong DAX, that's last month's. Thought I had it updated. But it's the first time you're pulling up data on a new contract. It's got to pull all that data down. It's got to download it all. Okay. Yeah, Chris. NinjaTrader is killing me. DAX futures. You got to click on the exact one here. There we go. March DAX. So change the setting to did I change it? 5, 0, 5, and 1. Okay, so you can see like DAX. Okay, again, the cash close, I forgot the exact time. It's around 10:30 Chicago time. Cash hours is it was at 2 a.m. Chicago time till about 10 a.m. So you can see this is with no swing filter. With DAX, just like NASDAQ, I would use a swing filter 5. Right, so it's going to clean it up, a bit more, right? So you're not going to get all that choppy signals in there, because DAX is trades like NASDAQ, right? It can be all over the place pretty quick. It's funny because the DAX, the evening session would be considered all this time after 11 a.m. It's evening time in Germany, but some decent signals. So the DAX is what, 25 euros a tick. So it's a big contract in terms of margin as well as in terms of tick value. But hey, if you could short it up here at 85, 90, and get a nice move down into the 50s, it's happy days for you. Just like here, right? A move from 60s, 5, 70 up above double O. That's those moves that you like in the DAX make your day. Here's a little move down, a little move up, a little back and forth before it finally settled. Bullish order flow, then boom, a big move up. This is DAX. Again, a lot of these European contracts, even though they trade until the futures close in the US 3 o'clock, really after 11, you don't really want to be focusing on them much. I mean, it's going to follow the S&Ps, but you really want to be trading them during the European session. I used to trade a lot of DAX when I was at Commerzbank, and I had a two lot out trade back in the 90s for 2 days, it wasn't discovered. Turned out to be it's like almost $100,000 loser. Bunds, okay, Bunds just really quick for you Europeans. Bunds is a great contract. You can move in and out real easy, a lot of liquidity. I'll just, I would trade Bunds sort of the same way I trade Ultra Bonds or even 10 years, 5 years. I would not use the swing filter. You can, if you're using a minute-based chart. This is a minute-based chart because on Bunds, you want to catch the immediate movements in the Bunds, as you want to mimic what the market is doing, right? You want to be trading on the side of the market, right? If you're short here coming down into new lows, okay, what do? I cover here? Do I cover here? Well, it's still telling me to stay short, stay short, stay short, stay short, stay short. Again, some nice moves down, nice move up. But again, Bunds, again, cash market in Germany closes at about what 10:30 Chicago time. So after that time, that's already considered, even though it's still open for trading, that's really considered the evening session over there. But like here, right off, you get short. Say you're short here, right? Then okay, boom, you got to buy. You get long, then it's got a short signal. Okay, you get short, it's not working out. Then okay, you got a buy signal, right? Then it says okay, stay long, stay long, stay long, stay long, stay long. From 40 all the way up into the 60s, where you got your first bearish order flow. This was obviously on the Fed announcement, the big push down. But the same thing, right? You stay short, stay short, stay short. Now, let's see, go back to order here. So 5, 5, and 1 for volatile markets. 0, 5, and 1. So here, 5, 5, and 1, the markets you look at, if you're in these markets, 5, 5, and 1, NASDAQ, MNQ, DAX, silver, gold could go either way, 0, 5, and 1 or 5, 5, and 1.